So it's good to see that we have a green day. I actually got a futures margin call this morning. So I did some things to manage that, and then thankfully we had a good recovery in the market. Let's take a look how I did today. All right, so we can see overall I'm up $1,173. I added some positions to TFLO today. You'll take a look at that. Tesla is up $224. Copper did a good job, up $225 today. We can see it went down 1 cent here. And then E-mini S&P 500, we had a good recovery, up $700 on the day. And I'll show you the trades that I made there. So I looked at my email this morning and I saw that I had an FM, and that stands for a futures margin call. I closed the day with a negative buying power, and that triggered a futures margin call. So I had to liquidate something to cover the negative balance. I was only negative about $150. I decided to go ahead and close the E-mini S&P 500 position that was closest to expiration. It was at 1 day to expiration, so I just closed it, collected $90. So it cost me $10 to get out of the position. It was a $100 position, so collected $90 on my 30-20-10 strategy. And then I decided to go ahead and start loading up a few more positions here, 25 shares on the TFLO. I want to try and build that cash account up. We'll talk more about why later on. So you can see here, I'm not opening any more trades on my 30-20-10 strategy. I'm putting a pause on it because I think there's something else that I can do besides putting a trade every single day. I think that I've exposed myself too much here. I've got $9,000 of my $18,000 account right now in this position, stretched across 30 days. And I think there's a better way to do that, an easier way to do that. I think I can do more testing the strategy, doing one position, and following it down the 30 days to expiration. So I think I'll have a better chance for success there, and it'll be easier to manage doing that one position and holding it through expiration. So right now what I'm doing is closing the positions as they're getting close to expiration. I may let some go through expiration. Most of these are European style options, and the time that they can get assigned is after expiration. So I'm not a huge fan of letting the E-mini S&P 500 positions here go through expiration for that reason. SPX is not that way. It is a cash settled expiration. So at expiration, it's a cash settlement. Everything is settled out. You don't own any shares at that point. So that's a big bonus with the SPX versus the E-mini S&P 500. The benefit to the E-mini S&P 500 is that it requires less capital. It's actually half the capital you need. E-mini S&P 500, in order to do this, like I have been doing it, it's a $9,000 position. And then doing it on the SPX, it's an $18,000 position. So that's why I'm using the E-mini S&P 500. I'm not going to be using that much for the 30-20-10 strategy. I'm going to be probably doing somewhere around a couple thousand, $3,000 position and holding it through expiration. So we're starting to see some good things out of Tesla here. We had a good green candle here. We have a push down below this lower trend line, this declining trend line, and a push all the way back up. And so we have a green candle here. It's a good sign. We have good green volume. I think we can continue to see a push up here, and it's going to test the 50-day average. I don't know if it's going to do that tomorrow. It may be something that we look forward to next week, but it's very clear that Tesla, despite the news on the CPI report and the inflation data, we are still seeing some strength here for a push up. And then we have earnings coming up at the end of April. So that's another factor here we need to consider. How's the price going to move whenever earnings does come out? So if we end up breaking the 50 moving average here, we could see a push up to the near 200s. That's where I open my two put spreads that I have. I would be able to close my positions, I'm pretty sure, at around that $200 mark. So that's what I'm looking for, is for Tesla to give that push back up. And it really looks like a good base that we're forming here. And you can almost see that we have a cup and handle that potentially could be forming here. We have the fall, the start of the cup, and then we have a base here. And then we're looking to see a push up, and then a candle form, and then a push up to new highs, up to the top of this ginormous bull flag that we have here. So that's really what we're looking to see. Ultimately, is this cup and handle forming, and then we could see a push up to and test that bull flag lower trend line. And so I don't know when that's going to happen. That's kind of what I'm seeing right now, is that this could be the bottom of the cup formation that we're seeing. So with copper, we can see that the price is starting to come down here. It's starting to settle down, which is really good to see. I'm making money on it because it's pulling back closer to that optimal place in my strangle. The position is really good. No matter where it is right here in this range, it's fine where it's at. But the best place for it to be for me in my current position is between 425 and 420. So if we look at the curve tab here, we can see that this curve, at the very top of this curve, the tangent is somewhere around the 425 mark. And that's where I'm making the most amount of money for the position. The closer it is to that point is the sooner I can get out of the position. And I usually do a 50% close, a 50% profit target. I'm actually shooting for 60% just because the position is doing really well. And what I did with my last copper position was I did a 50% return and then I opened it back up in the same expiration, and I ended up losing that money and then some. So what I want to do is just hold on to this and see if I can get the 60% profit target. If not, then I can always close it, but I want to at least give it a chance to hit that 60% if it can. And the reason for that is because I have so much time right now before I have to close the position. I manage at 21 days to expiration. Usually I open positions at 45 days to expiration, and I've held on to this position for about a week longer than I usually open the position. So I've got plenty of time here. I'm just letting it ride, and I'm not in any hurry to close it. So that's why I'm shooting for that 60% return. The IV rank on copper went down today. It's at 91.2. I think I saw it as low as 88. So it's good to see that go down because I opened the position around 100 IVR. So as that goes down, that means that the expected move starts to contract, and then the prices start going down on the options, which is exactly what I want. That's how I make my money, is when the prices of the options go down, my profits go up. I'm slowly accumulating shares in TFLO, which is basically my cash position. It's just a safe haven to put my money, because when times go south, I'll have a good amount of cash to be able to start opening new positions. That means when my current positions are tied up and I'm rolling them, I'll have a decent amount of cash to continue trading even though the market is moving down. So that's kind of my game plan. I want to be able to have a good cash pile when the market does eventually come down. Now, are we at the top? I don't really know. It's hard to say. We've come down here, and looking at the weekly chart here, it looks pretty decent. We're coming up off a good trend. We're still above the ADMA, so there's no reason to be pulling out or to panic or anything like that. We have a good candle showing here so far on the week, a good hammer that's showing reversal. We're pulling back here, and there's a good chance that we can continue to go up. But I still want to have some cash on hand that's making a decent amount of money. There's not a whole lot of risk involved, and that's just on hand for safekeeping. So I want to keep a certain percentage of my portfolio just in cash, ready to go, and just collecting a little bit of money on the dividend from TFLO. So that's my game plan. As I make profits, I'm going to be generating those shares. And what's interesting about it with the margin account, so I'm holding 200 shares right now with TFLO, and that's for about $10,000 right there. And it's actually only taking $2,500 of buying power to do that. I'm actually able to control a lot of the money in TFLO, a lot of shares, for not that much money. And so that's pretty attractive to me. I can collect the dividend there by just having my money sit in there. So that's roughly 15% of my account. So not a huge position there. It is a position to me. It's a cash position when things go south, and then I can use that money to start trading again. So do I think that the market is going to crash, that's going to continue to go down? I don't really think so. I think we had a really good day. I think it gave a really good signal that the market is going to continue to go up. We look like we're forming a trend line going down here, but it could have been very easily another red day today where we touch the 50-day moving average, or we go past it and below. And it decided not to do that. It wanted to come back up and push up. So it didn't want to break this price level. So it went down today to its previous low, and then it pushed all the way back up toward this trend line. Now, what we need to give us a good signal that we are actually in a reversal, we need the next day, which is tomorrow, the last day of trading for the week. We need it to open high and stay above this lower trend line. That's going to tell us that we're trending back up to the normal trend line before we had this pullback. So that's what we want to see if we want it to be bullish here. If the market is going to actually turn around, we need it to push up and not break these levels here. So if we start seeing these levels break, we could be in some trouble. So that's why I'm holding my cash position. This is kind of what I think about the market right now. We could be seeing a reversal tomorrow or next week, because really it could just keep trading in this flag right here until it decides to break next week. So we'll find out either tomorrow or next week on what's going to happen. Is it going to fall down and break this price level? Or is it going to be a market crash? Or is this just a pullback and it's going to be a little blip on the radar, 2 weeks from now, and we're not even going to be thinking about it? Time will tell. We just need to be ready when the market decides to go down. So I'm a new options trader. My goal is to get 50% return by the end of this year. And if you want to follow me on that journey, hit that subscribe button. I'm going to share with you what I know and the things that I learned along the way. And if you thought this video was a help to you, hit the like button, and we'll see you on the next video.